This conference will now be recorded.
All right, good evening, everyone. What I'm gonna create here for you right now is excuse me.
This conference will now be recorded.
All right, good evening, everyone. What I plan to do for you right now is go through a list of things to expect when you get into the live training room in the morning. All right. Um, I will bring out a checklist just to show you. All right. Here is my checklist. Now, these are all the things that I plan to cover for you. All right. First of all, I don't know what that thing is. First, first of all, um, what to expect and what you'll be looking at when you get into the room in the morning. Okay. Now, the live training room is to train you how to make money day trading futures contracts. It's going to be a fast moving environment, but don't be afraid to ask questions. Questions are encouraged and they should be entered into the question box in a webinar platform. The only person that can see what you type in, the only people, there's me, Valerie, Bert, and Dwayne. We're the only people that can see what you type in. You can't see other people's comments and they can't see yours. All right, it just keeps it a lot more orderly. So these are the things that I plan to cover. Now, I'm not going to go through all these right now because that just takes up more time and I don't want this video to take all night. All right, so we'll start out with this. What markets are these? Well, let me bring the markets up so you can actually see them. And then we will go from there. All right, here's one. That is gold. All right, and here is crude oil. And we're going to do the YM. Okay, the YM is the mini Dow. Now we also have an ES, which is a mini S&P 500. We have the NQ. This is a 30-minute ES, and this is back to the YM. Now, going back to my sheet over here, what markets are these? Well, I just explained to you, this symbol right here is for gold, right? This is just the current month that we're using for gold. This is March, and I believe HIJ, that is June, I think, I'm not sure. But those are the symbols that we're using right now. Now they'll change as we go through, the calendar. We'll get onto different months and we'll roll them forward to the next contract. Whichever contract has the most volume is what we look at. All right. So what markets are these? That one's checked. What types of charts are these? Right. That's interesting. I went over this quickly in the thing in one other video that you probably looked at before coming in here, but these are range charts. That means every bar that you see here is set to a specific height. All right. These bars right here are set to 4 ticks high. They're 4 tick range bars. So you see it says 4 tick R. That means 4 tick range. Every bar is 4 ticks high on these two charts. This one is set to 8 tick range. Every bar on this chart is set to 8 ticks. Now in this case, a tick is price movement up and down. All right, up and down, vertical price movement. In this case, it's up and down 4 ticks. In this case, it's up and down 8 ticks. All right, that's the type of bars that I use, and I use those because you can tell where the bar is going to close. Every bar closes either at the top or at the bottom. So if you're looking for a long trade and you want it to close at the top, like this bar right here has a low, looks like the low on this bar is 237. So the high is going to be 8 ticks higher than that. It's going to be 245. I know that it's going to be at 245 because it can only be 8 ticks higher. It can't be more, and it could only be less if it closed at the bottom, but I'm expecting an up close. So if it closes at the top, I'll be ready for it. And I can put a buy stop order if I wanted to at 246, right? So these are the kinds of things that we're gonna end up doing. And we'll be doing them live and we'll be doing them fast. Now, just because it's fast in the morning doesn't mean it can't slow down. No, we'll do training with you, one-on-one, small group training. You see how that one just closed right there at 245? I knew that was gonna close there. How did I know? Because I knew where the bottom was, so I knew where the top was gonna be. It's 8 ticks higher than the bottom. Again, the stuff that we're gonna be doing in the morning, it's gonna be fast, but you can slow it down just by going to a different time frame. For instance, this is a 30-minute chart. Every one of these bars takes 30 minutes to develop. These are a different type of bar. You don't know where it's going to close. You just know how how long it's going to last. It's going to last for 30 minutes, and then it's going to paint another one. You don't know where it's going to start the next one, but you know when it's going to start the next one. All right, knowing where is, for this type of trading, knowing where is more important. Okay, and you'll understand all that as we get through it. That's the type of charts that these are. The time frame, I just went through all that, and I did go through, are there others? Yes, of course there are others. What type of charting platform is this? This is DT Pro, all right? Now that's it, Daniel's Trading. Anyone who clears through Gain Capital as an FCM, which is a futures commission merchant, is going to have a chart like this. We have this type of indicator set up on several different charts, and we also have it on NinjaTrader 7 and 8, and we have it on TradingView. Okay, if you don't have any of those charting platforms yet, don't worry. The TradingView one, that's a global platform. If you're living in Canada, if you're living, wherever you are, as long as you have internet access, I'm pretty sure that you can get TradingView. Okay, and we have our indicators on TradingView as well. So I'll get down, that's at the bottom of the list to show you how to get TradingView. Okay, so this is DT Pro from Daniel's Trading. This, I've been using it for over a decade, and I am just used to it, and I'm comfortable with it, and that's what I like to use. Okay, what are these indicators? Well, I go through them one by one, starting right after that. Okay, you see the BBC, the MA1, the black step line, the slingshot, the cycle, the green line, the paint bars. I go through all this stuff, but these indicators are all proprietary in nature. You're not going to be able to go out and find them on any random charting platform. We own the indicator set. We own the rights to the indicator set, and us letting you use them, it comes in different packages, most of which you can pay for a lifetime license. If you're using TradingView, there's a good chance that you're using it as a trial or a temporary version. And if you are, or a permanent version, either one, we'll let you know the packages depending on what your situation is. Okay, but they are all proprietary indicators. All right. So now I'll go through them one by one. The one thing I didn't put in my list here is the yellow line, the YBR, and these dots. Now, we don't have those on every charting platform. I guess the YBR we do, but the dots we don't yet. So I'm going to get into those things individually right now, all these lines individually, and I'll tell you what to look for and why they're important. Okay, so we'll start out with the BBC. The BBC, I'm going to move this over to the side now. The BBC is the green line on price. Okay, it is this line right here, right, on price. That is the BBC. Now, why is that important? Well, the next thing is called the MA1, the red and blue line on price panel. It's not just a normal moving average, even though we call it MA1. It's just an acronym. When the MA1, which is the red and blue line here on price, crosses above the BBC, then that's an indication that you should start looking for long opportunities or buying opportunities. When it crosses below the BBC, that's an indication that you should start looking for selling opportunities or shorting opportunities. Okay, that's why the MA1 and the BBC are important. All right, so I just went over what the MA1 is, what the BBC is. Now the black step line, see BSL, that is this line right here. Now in the trades in the room in the morning, it is only used to disqualify trades. You want to have the black step line on the same side of the BBC as the MA1 is to be taking trades. So when you're thinking about going long, you can only go long if the black step line is above the BBC. If you're thinking about going short or selling, you can only go short if the black step line is below the BBC. All right. The black step line is a fast moving indicator, and it will cross like right in situations like this, when right here you didn't want to go long right here where it crossed down below, and you don't want to go short right here where it crosses up above. Okay, you want to wait until all the pieces come together. All right, that's what the black step line is used for. Now the slingshot, that is these two lines down here. Now the slingshot is made up of a lot of things, but the things that we show visibly show anyway. There's a bias line, which is at the 50 level. the green line, and the cycle. The cycle is the red and blue line. The green line is just the green line. Now in here, I give you the actual name within the indicator. The cycle is the S3 cycle, and the green line is the S1 fast within the indicator. Okay, now these are important because they show divergence or separation. All right, now that's something that I think I got into. Maybe I didn't. I thought I typed it in there. Well, anyway, they show divergence or separation. And what that means is the cycle is below the green line, that is bearish, or the cycle is above the green line, that is bullish. Now, if it's below the green line and it's red, that is really bearish. If it's above the green line and it's blue, like right here, that is really bullish. So you'll understand when all these things come together and how significant it is that that happens, all right? Now the next thing is called a paint bar. That's what colors the bars right here. Now this that you're looking at right here is relatively new. We actually just put it on this past Saturday, which was February, was this past Saturday? February 29th, January 29th of 2022. Now 10 years from now, we'll still be using this. It's not, it's a new thing to look at with your eyes, but it represents things that are already on the charts. It's not a new trade setup per se. It's just something to simplify what you're looking at and to help you when you're actually deciding whether or not to take a trade. It's going to help you and give you comfort or confidence in the trade that you're taking. That is what it is for, right? To help you gain confidence. Now, as you learn about trading, if you don't already know, as you learn about trading, one of the main things that people have to struggle with, or that they do struggle with, is confidence. And our goal is to simplify things and make the trading decision process as easy as possible so that you can do it again and again and again with complete confidence, right? And nothing is 100%. Our indicators are certainly not going to give you 100% results. Anybody that says that, they are lying to you. But what we can do is show you very high probability trade setups, things that happen again and again and again. All right, that's what we plan to do. Now, that was paint bars, the color of the bars. They're new in addition, and they're to show you the higher probability trades. Right now, when I get through all of these things right here, what I will do is I'll show you some of the trade setups, okay, some of the things that happened today, right? And then I'm going to end this video because I don't want it to be too long. But the next thing that we're going to look at is the DOM, right? The depth of market. Now, this is a DOM. What this is showing you is where people are trying to buy and sell, all right? Everybody over here is trying to buy. Everybody over here is trying to sell, okay? You don't know why they're trying to buy or why they're trying to sell. You don't need to know that. What you do know is that the current price to buy is right here, 1801.2, and the current price to sell is right here at 1801.1. Okay, that's what you know. Now, when placing a trade on the DOM, what you would do is you hover over the green area over here or the red area over here, depending what kind of order you want to place. If you want to place an order up here because you think price is going to go up there, and if it does go up there, you want to enter in the trade, you would right click on that level right there and it would place an order. Okay, and if you think it's going to go down here and you want to sell it, if it goes down there, you would right click down there, all right, if you want to place a trade down there, all right? That's all you have to do to put a trade on. If you left click, it's going to go right here at the current position. If you left click here, it's going to go right there at the current position. If you left click over here, it's going to go at the current position. All right, now we're going to skip right down to here to stops. Right, so I covered the DOM. This is what a DOM is. Now, these are stops and targets. All right, those are these two right here. Now, every trade that we trade within here starts out with defined risk. The risk that we use is 2 bar lengths. So these are 4-tick range bars. So the risk is 8 ticks. Now, these items right here are how you set the stop. Click on this right here, and it's going to set the stop. You see when I when I hover over here in the green, right there, the orange that you're going to see right over there, that is where the stop would go automatically. That's the maximum amount of risk that you're going to place on a given trade. That's with a 4-tick range. If I do the YM with an 8-tick range, that's going to be 16 ticks because it's 2 times 8 ticks. Okay. Now, if I wanted to put a target on, I would check these boxes right here, and that would put a 10-tick target on. So you see now, if I hover over here in the green, it's got the one box down here and then the other one up here. One down below is a stop, and the one up above would be the target. All right, I don't typically put targets on automatically in the beginning because a lot of times price is going to move quickly and you're going to be able to take advantage of huge moves. Like right in here, for instance, if you got short on this, it ran probably 30 ticks. You don't want to limit that to 10. You want to get all 30 of those, or 25 if you can. Okay, that is the DOM. Now, so I covered stops and targets. Trailing stops, when price starts to move, you'll learn how to trail your stop, and I'll be teaching you how to trail the stop and how to see where price should go to within the DOM. Okay, I'll give you ideas. I'll draw lines on the charts. Like, let me just scroll back to earlier today on this. You see these lines in the charts right here? These are areas that I could see when price was down here. I could see it was trying to get up to these areas, all these areas I could see, and we're looking for trade setups. These yellow arrows are places that we entered, right? The ellipses are places that I should have entered, but I missed. But the yellow arrows are places that we entered and exited. Okay, and that's from this morning's trading. And that all happens. All these trades right here were all within 15 minutes. Okay, these trades right here. This one was a little later on. That was like another 20 minutes later. But no, there's going to be a lot of activity. Normally, there's going to be a lot of activity and a lot of trading going on. All right. So a trend. Now, a trend is when you have lower highs like this and lower lows like this. Okay. If you can draw a trend line like this, down the highs and down the lows, then you have a downtrend. If you can draw a trend line like this, up the highs and up the lows, then you have an uptrend. In a downtrend, you want to sell. In an uptrend, you want to buy. Now, the exact places where you want to sell and buy, that's what we do in the room. That's what we train you to do in the room. Okay? That is the trend. Now, the crossover, I told you about that when the MA1 crosses the BBC. Okay? That's the only place you really look for the crossover. Down here, you're looking for the separation. All right? That's what you're looking for down there. Okay? Now, do we have a track record? Yes, we do. If you click on this link right here, it is going to bring you to this spreadsheet. Now, the spreadsheet is filled out in front of everyone in the room, at the end of every room, at the end of every session in the morning. Right? The spreadsheet actually goes back to January 2nd of 2000. This says 2012. I think it's 2013. But, well, maybe it's 2012. I thought it was 2013. But, oh, this is, I'm not sure this is the right one. This one does go back to 2012. The normal one that I use is, hang on, this one, right? This one does go back to, well, this is 2013 too. It's not the one that I normally use because it doesn't have today's data in it. Hang on, let me get the one I normally use out here. Let me close that, and close that, and go here, and right here. This is the one that I normally use. Okay, this is the one that I normally use. And this one does go back to January 2nd of 2013. That other one was something that we started in 2012, and I don't think it was January 2nd. I think it was December 2nd. But anyway, this is all of our daily trading results going all the way back to January 2nd of 2013. Like this is, hang on. Let me go up just a little bit more here. Hang on. I was still working on the spreadsheet because I wanted to get it right. Okay, that's the end of November. That's the end of December. That's all 2021, you can see. The end of last year. And this is the end of last year. And this is January. Okay, so here, let me spread this out a little bit. Now, what I put in the spreadsheet The information that I put in is the money that we make in the morning session, the number of ticks that we made per market. And you see I started to add the YM in here because we had some trouble with the ES for a couple of days, so I traded the YM instead. But it shows all that. The number of trades, and this is the number of minutes it took to get the goal for the day. This is the number of trades it took to get the goal for the day. This is the price I was at when I got the goal for the day. And then I trade the whole 2 hours. So that's the number of trades I took during the whole 2 hours. Okay, this is the month of January. So we just wrapped up January. It's February 1st today, 2022. And so this is how we ended up this morning. Okay, 2/1/22. It's 75 ticks on YM, 4 ticks in crude, 3 ticks in gold, and we didn't trade the ES because it was messed up again this morning. Today it took 13 minutes and 2 trades to get to the goal for the day. Now, what you see at the bottom here, and I'll show you, well, I guess I can show you this year's. Okay, it's not completely working exactly right now. Last year's I had working completely right, but what you see at the bottom here is the total, the monthly total, right, and the yearly total, the number of days, the average made per day in the room, and I spread it out to show you other things. I'll show you the stuff at the end of last year's, because at the end of last year, all of that stuff was working right. I'm still trying to figure out the spreadsheet for this year. It's the first time I've had to actually change from year to year with this part of the spreadsheet. But that's what we ended up with at the end of last year. It was over 250 days, average $584 per contract per 2-hour trading day. If you were to stop trading when you got your goal for the day every day, and you added 1 contract per month, so at the end of the year, you're up to 12 contracts. Now you would have only traded 65 hours total last year if you stopped trading when you got your goal for the day. And based on the number of hours traded and where you were when you got your goal for the day, you would have $3,065 is what you would have had for an hourly rate. Now that's assuming that you were able to do everything that I did for the whole year, and that's just, everybody does things just a little bit different. But that's the checklist. I think I finished the whole checklist there. Let me just check and see. The trading view, that's what I didn't do. All right, now the trading view charting platform, that is for anybody to use. I mean, if you're already one of the partners, and TradingView is relatively new to us, all you have to do to get TradingView is go out to tradingview.com. Here it is right here. Go out to tradingview.com. Don't click on Get Started. Click over here on Chart. Now it's going to bring up a chart, probably. Yeah, it's going to bring up this random chart. Click on Start Free Trial. When you click on Start Free Trial, I already went over this once, but click on Start Free Trial. If you already have TradingView, then you just sign in. If you don't, come down here to where it says Sign Up and click on that. You can do it with your email. I'm sure you have an email. Otherwise, you wouldn't be communicating with us. Click on your email, and then it's just going to ask you to put in your email, give yourself a name, and all that. Hit the Create Account. It's going to send you a confirmation email. Just click on that. Okay, and once you do all that, then you're going to be logged in. All right, then you're going to have a chart. It's going to come up like this, and it's going to issue you an ID. Okay, so your ID, I'm going to sign in with this one. Now your ID is going to be right in here. This is our ID, CFRN. Right? Yours is going to be in there. You need to copy that and email it to us. Okay, you can do it. You can click on Profile right here, and it's going to bring it up bigger right there. Just need to copy that and email that to us. Right, and we will be able to set you up so that you can put your indicators on the charts. You see right now, these are our indicators on the charts. All right, now hopefully, yeah, what's going to happen is you come here to indicators, and it's going to say invite only scripts down here. Once you send us that and we enable it, then this will be enabled down here. It'll say invite only scripts. If you click on that, then just click on price panel one time and click on Slingshot one time. I'll show you what that does. Okay, see, these are all the indicators right now, but if I take them off, see, oh no, the indicators are all gone. All you have to do, go up here to indicators, go to invite only scripts, click on price panel one time, once. See, price panel, click on Slingshot one time, once. Slingshot. That's all you got to do. Okay, then you have the indicators on your charts. Now these charts are free. You're not going to have real-time data for free. You're going to have to work out however you get your data. You're not going to have real-time data for futures for free. You'll have real-time data for equities for free, but not for futures. Okay. All right. That's the trading view part. I can check that off my list. All right. So there. Now, quickly, I just want to show you what the trade setups are. Okay. What you're going to be looking for, as I said, is step one, you're going to be looking for the MA1. Well, first, step one, you're going to be looking for a trend. You're going to be looking for higher highs and higher lows, right? Step one is the trend. You look for higher highs and higher lows. Step two, after you have the trend, is you want to have the cross of the MA1 in the BBC in the direction of the trend. If the trend is up, you have higher highs and higher lows. You want to have a cross above the BBC by the MA1. Step three, after the cross, you want to have price pull away from the BBC. All right, step four, you want to have it pull back down and touch the BBC like this. And step five, down here in the slingshot, you want to have bullish separation. You want to have the cycle to be blue and above a green line. All right, that's the highest probability trade setup right there. Comes down, hits the BBC, you get an up close. The MA1 is the right color, the cycle is the right color. You go long on the up close, you buy on the up close of this bar. Where's that up close going to be? Well, if the low of this is 88.13, then top of that's going to be 88.17. Okay, remember 4 ticks higher, 88.17. So that's where you're going to buy 88.17, maybe 88.18, and then you just enter your trade, and you would look for it to get up to your profit target. In this case, it went from right here at 88.17 all the way up here to 88.33. Okay, that's a 16 tick trade. That's $160 per contract. And that trade took 10:54.53 to 10:55.23. It took about 30 seconds for that to happen. Okay, now I know that sounds like it's fast, and it is, but you'll get accustomed to seeing that happen and doing it over and over and over again. All right, see there's another one right here. Now this one, the thing that happened with this is the cycle changed color. Now when the cycle's the wrong color, that's when you have to use a trend line. All right, so I'll teach you how to draw trend lines, when to draw trend lines, how to draw trend lines. Then your entry point is going to be the close on or above the trend line. Now that's all for a long trade. Okay, if you're buying because the MA1 is above and you're in an uptrend, you're buying. That's how you do it for a long trade. If you're selling because you have lower highs and lower lows and the MA1 is crossed below the BBC and you're selling, then it's just the opposite. You're just looking for everything to come back here and you're looking for an opportunity. The first close on or below the trend line is what you're going to go for. So right here is where I went short and I took a little bit of profit this morning right there. Okay, now here's another one right here. The selling point for that would have been right there because the trend line would be like this. Okay, so the selling point would be right there. And look, there's about $200-300 in profit right there. And that one took 11:27.22 all the way to 11:29.06, about a minute and a half. There's like $200-300 per contract right there. So there's a ton of opportunity and it happens again and again and again. Like look at this move down right here. There was from right here, there was a trade. 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 So in that one move that lasted about 2 minutes, there were 3 opportunities to probably make $400 a contract. Okay, so this is what we're going to be doing in the morning. This is what I'm going to be teaching you. And that's what I've been doing every single day over and over and over again, the same thing for years. All right, so this is the spreadsheet. This is the spreadsheet. This is the checklist. Now I can send this checklist to you, but I'd be better off just sending you the video. I think that's what I'll probably end up doing. All right, so there you have it. With that, I'm going to wrap it up. Thank you for listening to my video, and hopefully that is helpful and will get you started. Thanks.